Well, thanks for tuning in to this conversation on earnings. Of course, the numbers from Balrampur Chini came out last week, but we wanted a slightly detailed conversation with Mr. Pramod Patwari, who's the CFO of the company, especially after the fact that not only have they, for example, in the quarter done phenomenally well on the numbers front. Ethanol sales grew 57 odd percent, revenue was up about 16-17%, and the other metrics came as they did. It will be lovely to understand from him what's next, not just till the end of this current sugar year, which is till October until the new crushing season begins, but how do they think about the business going ahead now that there's a lot more stability and predictability to cash flows and operations. Mr. Patwari, great having you. Thanks so much for joining in. Um, Lovely having you, of course. It's not the end of the sugar year, but because it's, for lack of a better word, end of FY23, would just love to understand how you think about the last 12 months gone by in the quarter four, especially since ethanol sales have grown so much, and what happens in the remainder of the or what happens in the next 2 quarters, wherein sugar crushing will obviously not be as heavy as the first 6 months of the sugar year.
Good morning. So, as you know, the last 2 years were extremely challenging for Balrampur from the point of view of cane availability. So, our major variety in our area was around the CO238, which got badly impacted because of the disease attack. So, we were at some point in time 75% of that variety. That we have reduced significantly to below 50% now. And in next 1 year, we are hoping that we will be below 30% as far as that variety is. We are working very closely with the farmers in order to diversify our basket of with new varieties which are high recovery varieties. Maybe in the next 1 year you will see varieties like 118 will have a significant presence in our basket. This is going to make our life easy, I would say, as far as the cane availability is concerned, which acts as a feedstock for our expanded ethanol capacity. So the last 2 years were bad, particularly with respect to Balrampur on account of low cane availability, which looks like is largely taken care of. As far as your question goes with respect to what will happen in the next 2 quarters, so for the sugar season 22-23, we completed our crushing on 7th of May with 1030 crores quintal of cane. That is 15% higher than last year. And recoveries were also better by 15 basis. The initial estimates what we are getting as of now on the basis of planting which had happened in our area looks like maybe another 10% increase from here on next year. But that is too early to make any view as of now because we are hearing of El Nino as far as other weather and climatic conditions are there. So as of now, a 10% increase in cane availability for next
year. I reckon since ethanol sales are playing such a large part of your overall revenue growth as well, you have completed almost all capex, if I'm not wrong, all major capex with now 1050 KLD, if I'm not wrong, of the distillery capacity with you as well, operational and executable. What does this do to the overall picture for the next, let's say, 6 odd quarters? Because the capacities also get utilized, I presume, in bits and pieces. So how do you see this energy segment of yours contributing to Balrampur over the course of the next 6 quarters?
So our expanded distillery capacity got commissioned in the month of December, by end December. So we are yet to see the full benefit or full potential of this expanded capacity. As we move ahead, we are looking at around 35 crores of our total alcohol production capacity out of this 1050 KLPD. So within these 35 crores, around 3 crores will be earmarked for production of ENA to meet the country liquor requirement. And the balance 32 odd crores will be available for production of it. Ethanol or the distillery division as a proportion of revenue in the overall basket of the company is expected to contribute around 35% or 33 to 35% in next 1 year.
Right. Mr. Patwari, I'm just trying to understand. Okay, first the numbers and then we come to the broader picture. There was, if I'm not wrong, a higher interest cost as well for Q4 as well as for FY23. Now, and of course it was a tough year, I understand, but I'm just trying to figure out if indeed cash flows improve materially because of higher ethanol capacity, and if the larger portion of the capex is behind you, at least in the very immediate term, do you see the need to and the desire to reduce debt as it stands, or you are comfortable with the debt equity as it stands currently?
Yeah, you are right. The debt as well as the interest cost has gone up. Obviously, with the reason that we have expanded our ethanol capacity and we have done some modernization in sugar plant also. So a significant portion of this debt is with the interest subvention of 50% from the government of India. So there is a reason for this debt to remain in our books. But whenever we get an opportunity, when cash flows start coming, we will definitely use that opportunity to retire that portion of long-term debt which do not command any interest subvention as of now. In the last year, out of almost 1,000 crores or 1,100 crores of capex, we borrowed only 466 crores, and a significant portion were deployed through internal approvals. That resulted in higher utilization of working capital as of now.
So, and therefore you're saying that the remainder portion of the debt which doesn't enjoy this interest subvention is very limited, and therefore there is no pressing need to, go out and really repay that. You will do it as and when time and situation permits you.
So that portion is only 140 crores. Maybe after a year we can think of retiring that before time.
Got it. Okay. Now I'm just trying to probe slightly more, Mr. Patwari. How do you as a management, you are arguably the second amongst the top two sugar companies in the country currently. The market has recognized the fact that the sugar business is no longer going to be probably as volatile as it has been in the preceding decade. The rewards for the market capitalization have been seen in the last 12 to 18 to 24 months as well. How does a management think about what's next? Because the fact that the sugar companies are no longer just sugar companies but also energy companies is well discovered. You have a very large ethanol capacity. You mentioned 35% coming in from that. What happens next? Not just over the next 6 months, but let's say over the next 2 or 3 or 4 years. How do you see the roadmap for a Balrampur over the next 3-4 years?
So we are not looking for that long as of now.
Okay.
Yeah, as I said that even to feed the ethanol capacity, we need to have the feedstock which is cane in our case. So we are working very closely. The moment we get a visibility of further cane increase happening in our area, maybe at that point in time we'll take a call. But as of now, as I said in my earlier communications as well, 35 crores of this ethanol capacity with which we are working, and working very closely with the farmers to take more and more cane under our control.
So how does growth come in? Does it come in because of higher utilization and maybe higher realizations of ethanol? Because I think as of now, the reports that I read pencil in about a 3% uptick in realization only. So is it a formula driven thing? Will it stay this way? Can you talk a bit about how does growth come about? Not just for the next 6 months, but for the next maybe 6 to 8 to 12 quarters?
So ethanol price realization is largely a function of FRP. So it gets translated the moment the FRP goes up.
Right.
So thereafter, a lot of other expansion or other growth which will come to Balrampur's fore will be through increase in the cane availability, which would also result in sugar volumes going up. Export market is extremely lucrative at this point in time, and because of the regional disparities which is there in different parts of the globe, we think that these export opportunities will always provide a decent opportunity for Balrampur.
Okay, that is part one. Part two, I heard you say in your answer that in your case, the feedstock is largely sugarcane. Just trying to understand, there's a lot of chatter over the last 12 to 18 months about multi-feedstock kind of or optional feedstock kind of capacities also being set up by select companies. Have you done that already? Are you exploring that, or are you not doing that for a particular reason so as to enhance the capacity utilization of your distilleries? Any thoughts that you can share with us?
Yeah, we have already done this, put up a distillery capacity which will run in off season during this year as well. So at Mazapur unit, which commissioned 320 KLPD distillery plant last year, is expected to run on grain-based distillery this year. So we are going to see the performance of that grain-based distillery and then take a call going forward.
Okay. Okay. So here's my question then, Mr. Patwari. Are you being a bit modest about the growth numbers as they come in because of realization uptake of seasonal, if I can use that term, ethanol production, as well as in your case, because of the newer cane variety and availability of cane, more upticks too? Because when I look at what estimates analysts are putting out about the kind of growth that you can show, the numbers are fairly stark, more so on the operational and below the EBITDA line numbers as well. Are these realistic, or will it be a more moderate, gradual kind of growth that you envisage your company to throw up?
As I said, we are not looking beyond 1 year at this point in time.
Okay, let's talk about FY24.
Yeah, as far as FY24 is concerned, as a season has just completed, we know what kind of volume we have done. So maybe we are looking at around maybe 20% growth in terms of revenue for FY24. And 35% of that will come from distillery division.
And the bottom line growth could be higher, much higher than the 20% top line growth that you're penciling in?
So we have never given any guidance as far as the bottom line is
concerned. I agree.
I would explain myself.
No, but so okay, let me rephrase my final question really. And actually I would have one more question, but before that, I'm not asking for an exact guidance, Mr. Patwari, but is it fair to assume that the numbers on below the EBITDA line on the bottom line front could expand at a faster clip than the revenue growth?
As we were discussing, the last 2 years were bad for Balrampur because of the feedstock non-availability. That impacted our overall cost of production as well as the margin. Volumes were also on the lower side. So as we see the visibility on the availability of cane, I would say that profitability numbers might improve from there.
Got it. One final question. Would you at any point of time envisage, in order to set up additional capacities, any kind of fundraise at all? Or would you believe that, considering that FY24 promises to be a much better year and you're thinking about 1 year only at a time, that if you even envisage a large capex, it will be done out of internal accruals or debt?
So there is no serious capex on our radar as of now.
Got it.
Let's see how the things pan out.
Okay. Fair call. Mr. Patwari, lovely talking to you. Thank you so much for taking the time out and being with us and giving us your thoughts. Much appreciated.
Thank you.
All right. And viewers, thanks for tuning into this conversation with the management of Balrampur Chini.